The three of us have never sat down in person.
No.
Vegas.
Vegas. That's where we...
Last time in Vegas.
Except that was the one where you took all the film and you flushed it because Sam's FTX exploded and you said it was all worthless.
Yeah, I learned a hard lesson. We shot like 40 interviews and panels and conferences, and then FTX blew up a week later, and I went back and listened to them, and not a single one was relevant, like, at all.
Immediately.
The entire industry.
Immediately irrelevant, yeah.
So you guys obviously know we do Macro Monday every single Monday, but it's a random Wednesday in Las Vegas.
Macro Random Wednesday.
I think it's the irony that this is, a Bitcoin conference or low time preference, hold, never sell, forever in a casino. Literally the most high time preference, spastic, FOMO, lose your money as fast as humanly possible place. The bipolarity of it is nuts. But first, I guess, what are your first takeaways from what you've actually seen here?
Well, I mean, just walking through here today, the last couple of days have been mostly business meetings for me. So
you look like it.
What's that?
You're dressed for it.
Yeah, I'm dressed for it, right? So, not my hoodie and my ball cap. 5 a.m. on Monday morning.
Look at the Bitcoin stocks.
Yeah, that's right.
I mean, it's hard to get up at 5 a.m. and actually be coherent.
You're the hero of the show.
So,
what are the takeaways? It's crowded.
It's crowded. So today it's much more crowded, a lot of energy. You can actually feel the energy this time. It's way different than last year. Nashville was great, but you can just feel the energy here. And what I mean by that is people come up and say hello, and you just feel this more of an urgency and excitement, which is it's been positive. I think it's going to be a great conference.
Yeah,
I mean, I'm comparing this to the way this moved from Miami. So the first one post-pandemic was euphoria. My wife described it as kind of part frat house, part circus because of all the various clown stuff going on and all the other crap that was there. A lot of people in a tight space, and there's a lot of energy there, but the energy was like frenetic and fevered. This feels more like, okay, we're making it, this is happening. How do we handle the next phase? And the next phase is different. The next phase is a growth adoption phase. The next phase means it's integrated with finance. It's not just a thing that you have on your computer, and the Big Bang Theory episodes where they lost the computer and they're going crazy and they have a USB key that gets wiped, ends up in a landfill or whatever. It's just different, right? It feels like it's growing up. So we have people like you that are professional hedge fund managers, and you've kind of probably felt like you were trying to bring sanity to the market for the last several years. Because for now, people are looking for people like you.
Mm-hmm. Yeah,
right?
It's
and if that's what that kind of comes right at
maturing. It's definitely maturing. Yeah.
My takeaway is something Tillman actually said earlier. There's no mascots and NFT projects on the floor, and I would say that the average person here is 15 years older than the first Bitcoin conference I went to.
Yeah, I think that's probably. I'm still old, I guess, but whatever.
You can still get older.
Yeah,
all right, so
it's a mindset.
Yeah, so this is supposed to be Macro Monday. We don't have Mike McGlone, so basically we suck.
So
without Mike, because we need our accountant. We need somebody to argue with. Yeah. We don't have a morning meeting. I can't tell you that I'm tilting over to the macro, or that the key thing.
Mean revert.
Well, look, NASDAQ's down 100 points and Bitcoin's down, a couple $1,000. So I guess they're correlated, is what he would say.
Directly correlated.
Directly correlated, because it proves it. And gold is down, $5, so it's not correlated. I don't know. I mean, look, Bitcoin, we were talking about this last night at dinner. Show me a Bitcoiner who is over the age of 25, who wasn't at some point starting as a gold bug. If you can find that person, there aren't very many of them. Maybe I'm getting it wrong. Maybe it's
35.
30. But whatever. There's an age that if you're a Bitcoiner, you started as a gold bug because you understand the government's printing money, they're debasing it, inflation is a tax, it's taking it from you. And if you have that worldview, you understand that's what you buy Bitcoin. Full stop. That's pretty much the entirety of the investing universe that matters. It has money. So in my mind, knowing that is true, and Mike could argue that if he wants, I don't see how you take the other side of that, because it's just, if we polled here, how many people who are Bitcoiners either owned or own gold, you're going to get, almost everyone's going to raise their hands. Yeah, because it's the same case. So to make the argument that because the squiggles on a chart at times of financial stress correlate Bitcoin to risk assets and not to gold it's just silly. It really is silly. In the long run, it's going to be more correlated to that, except we believe, as a conference, and there are double-digit thousands of people. I don't know what the total count is, but I know I heard some crazy
Somebody said
number.
there'd be 50 in town. I don't think there's 50
I don't know
here,
if it's
but
40,000. Large numbers of people that all believe that Bitcoin will eventually, because of its native superiority in the digital world, overtake gold. And so that's going to cause volatility, 100%. It has to, right? It's just math. So to me, that's the biggest thing. And when you talk to people about that and you hear how many people really understand that the government is printing. And when the Vice President of the United States understands the government is printing, when the president's family is putting money into this stuff. But the only negative news that I've heard recently, and it is a macro thing, is I think the odds of politically being able to do a Bitcoin strategic reserve with Vivek's company buying Bitcoin, with the Trump's company buying Bitcoin, is borderline zero, because there's no way the Democrats aren't going to filibuster it, because they're going to blame them, which will, of course, will go down in history as one of the dumbest moves they've ever made. But they're going to do it anyway. And so that's about the only negative. But honestly, does that really matter, right? Given the pools of capital. I mean, you tell me.
Well, I think, like you just said, I mean, it's going to have to run a gauntlet, to get through. And we had John Deaton in the crowd here. He would probably agree. I mean, the issue is nothing gets done in Congress without self-serving interests. And so that we've seen that for decades and decades. And I do believe that it's going to be brought to the floor. I do think it's going, it'll go through, it's got to go through committees, it's got to go through comment periods, it's got to have revisions. So I don't know if it's like non-zero, like close to zero. I do think it eventually does get done. Dave, I just think it's not going to look like it does today. That's the difference.
Well, speaking as an American patriot.
But it could reflect the executive order, which just says we don't sell. I mean, that could be codified into law and not as controversial as buying. But we haven't even gotten an audit yet, which was promised, on how much Bitcoin the United States government holds, which is absurd.
Which is absurd.
Which we try to figure the game theory of that. Why is that possible? Because it's certainly their only interest in doing that would be if they think that they owned more or confiscated more than people otherwise knew, and they're trying to figure out how to explain it. I mean,
or they already sold it.
But if it's already sold, they'd have no problem with that, because they would just blame Biden for it. I mean, he loves to blame Biden. It's like his sport, for anything else. So
you're about to say, as a patriot.
No, as a patriot, I believe that buying an asset that's going to appreciate as significantly and as an asymmetric return makes sense. I would have said that we should have been investing the S&P fund in assets other than treasuries for the last 40 years. I thought it was a good idea 40 years ago, 30 years ago, 20 years ago, 10 years ago, and at pretty much every time frame it is. And Bitcoin is even a better bet than that.
Interesting, there's a huge groundswell, and not just here, obviously, that I'm hearing all over the place that the 60-40 is dead. We know the 60-40 is dead. We've been talking about it for years, but I'm hearing, registered investment advisors who have nothing to do with Bitcoin saying that.
Yeah, I mean,
they haven't made the jump necessarily to what you replace that with. Right. Some have.
Well, I mean, and the issue is the money managers are starting to realize that the drive down to ZIRP, zero interest rate policy, made bonds an incredible, ballast and investment for decades, right? And that is over. And the reason that's over is because everybody's waking up to the fact that we are going to continue to run massive, just relentless fiscal deficits. And there's just really no way around it. I like what Doge is doing. We've talked about it, but you're not going to be able to get to, surplus through Doge. It's not going to happen. And so you're seeing the long end of the curve, the 10-year, 20-year, 30-year treasuries. There's a rate premium on that we've talked about that is it's running about 90 basis points. Is that right, Dave? About 90 basis points on the 10-year, which means that it's trading about 90 basis points above where it normally would because of duration risk, interest rate risk.
But let's dig in there, because you know the stats. I was told the stats last night, so it's fresh in my mind. That if you look at the $9 trillion that's rolling off this year, they have to replace $9 trillion coupon, $9 trillion that has an actual that's maturing, and an interest rate that averages under 80 basis points. And then the following year is another $6 trillion, I think.
That's $9 trillion, 80 basis points, really?
That's what I was told.
Sub 1%.
I know that there's 15 trillion that's at around 1.7 something basis point, percent, and that's you look at where they're going to be refinancing. I mean, that's going to goose the deficit more than they could possibly cut.
I think it's actually, I don't know where you heard that stat. I think it's much higher than that, which is, but either way.
1.7,
it's
even
1
way.
and 3/4 is what I heard on like 15 trillion.
The issue is you're also adding, you're replacing 9 trillion, right? And most of that, so for people to understand that are watching, most of that is, those bonds will mature, they're T-bills. They're going to mature, and then they're going to be reinvested. They're money markets, and so they're going to be reinvested in whatever the next T-bill is. So that's why we keep rolling these things. That's why when Scott Bessent back during the election, during all the campaigning, he was really critical. And we've talked about this on Janet Yellen for not terming out the debt. So what does that mean? That means not issuing debt that's further down the yield curve, meaning issuing 7-year, 10-year, 20-year, 30-year debt. The 20 years is kind of a throwaway, but let's just put that over there for a second. But he was really critical about that.
I'm sure he still is.
And he still is, but why was he so critical? 2 reasons. Janet Yellen had the ability to term it out before the Fed started really raising rates rapidly. She had a couple of years in there that she knew this was happening. She had been the chairman of the Fed, so she knew that printing all that money was going to create inflation, and that was going to create the need to raise interest rates. So why wasn't she issuing, longer paper? Okay, it's a good question. The second thing is that, once he got in and he's realizing that he expected the interest rates to come down. So he was critical that she didn't do it, right? And then he expected the interest rates to come down because we had started lowering rates in the fall, and they have not come down. And even though the Fed lowered rates by 50 basis points, we all know what happened in the fall when they lowered the rates by 50 basis points. What happened to the 10-year? It went up by 50 basis points and now up about 1%. So it's been difficult for him to do anything, and he's locked in, right? So now you've got the bond vigilantes who are saying, okay, so Doge is not going to solve the problem. Oh, and that tax package that Trump just floated. Oh, and we're still running 2.3 to $2.5 trillion deficits. Where are you going to put all this? So that's why the 10-year has gone up in yield so much, and now it's hovering around 4.5, 4.6%. And so now you go back to your original statement, which is the 60-40 portfolio is dead. Well, if you're going to put 40% of your portfolio into bonds, you're not going to just own T-bills. You're going to have to own 10 years, 20 years, 30 years, right? Which now gives you duration risk, which is why the bond vigilantes are out there saying, no, we want more premium. And so here's the crazy part, which goes all the way back to your statement, which is that we talk about Michael Howell a lot on this show because I really do enjoy and find his work valuable on liquidity. But what he said that on a piece that I read last week was he believes that the 10-year it would be about 50 basis points higher. It would be over 5% yield on the 10-year if we weren't issuing so much on the short end. So if we actually had started issuing in the longer end, then that would be much higher. So who wants to have a 60-40 portfolio knowing that once they do start terming out the debt, that the interest rates are going to go higher on the long end? Why would you want to have that interest rate risk in your portfolio? You wouldn't.
So what's it get replaced with?
Well, I mean, I've said from the beginning on this show so many times, the only way really out is through, meaning that they have to grow revenues. It's the only way. They have to figure out how to have the government get out of the way of all of basically, and it's worse at the state level than it is at the federal level probably.
And small companies.
But the stat that's the eye-opening one, and these are averages. They're actually way worse in some industries and better in others. But what takes 10 months to build for a factory in Southeast Asia, whether it's China, Vietnam, et cetera, takes 7 years in the United States.
Didn't they build the Pentagon in like 14 months?
Whatever. I mean, it took...
We used to be able to do it.
Yeah, it's not the swinging the hammers that's the problem here. It's the some guy knocks in one nail. It's like, wait a minute, we need to call the government to go look to see did they put in that nail correctly. I mean, it really is an enormous amount of red tape.
And did the noise disrupt any of the wildlife?
Right, exactly. Right. Yeah, the only wildlife they don't care about are the whales that the wind projects are killing in the ocean. And speaking as someone who's
and
a
the birds
homeowner,
that the wind projects are killing,
and knows that the fisheries are being destroyed by the wind. But I guess offshore wind is considered okay by the environmentalists because climate change. I don't know. It's just whatever. But you don't want to go down that rabbit hole. But well, look, it's true. I mean, I'd love to have that debate with someone. I'd probably have them apoplectic by the end of it. But the point is that you can't. That's the whole problem with the whole tariff situation. That's why he's been backpedaling faster than Deion Sanders in his prime, and that's because, sorry, hey,
That's good.
You got the live audience, so you got to throw a joke in here. But he's been backpedaling on these tariffs not because they're a bad idea to try to level set reasonable tariff situations, and a lot of the structural situations, particularly with Europe, with the way the VAT works and how they can do closet deals to kind of screw you by making you pay the VAT on one and not on the other. The problem is that we can't replace our supply chains and fix our supply chains with the regulations that they are. That's the problem.
Let's be truthful. He's backpedaling on tariffs because the market started crashing.
Oh, sure. I didn't say that. But he's doing
Tim Cook and Jamie Dimon called.
But the reason the markets are crashing is people are like, well, what the F?
$3,000 iPhones.
People are the iPhones would go up, but he'd get Tim Cook had them on speed dial, so they fixed that. But it's like your Walmart shelves aren't going to be there. I mean, we all saw in the pandemic we couldn't even produce toilet paper correctly. I mean, come on. Yeah. I mean, it took, how many months did it take to reconfigure existing factories to go from commercial to household toilet paper? I mean, we suck at getting things done in this country because we've thrown red tape at the state, local, and federal level.
And in World War II, we were able to repurpose the entire industry of the United States in the 1940s to be a war machine and stimulate the economy, but we can't make toilet paper.
Right. So
in 2025.
So the reasoning is because we have levels of bureaucracy everywhere, and which is, if you listen to what Elon was saying at the beginning of Doge, he said this is the most important thing. So we're going to find waste, we're going to find fraud, but we have tons of horrible regulations. So when they finish this budget and they have the political capital to do it, but what they really need to do is go after, there's a rule for those geeks out there. Carlo is in the audience, and I know he's going to laugh. The administrator,
he called you a geek.
Theoretically, hey, I mean it as a term of endearment. I proudly identify as a nerd, so no problem. But there's this law called the Administrative Procedures Act. The Administrative Procedures Act says that every regulation passed is supposed to justify through cost benefit. On that basis, Gensler had his ass suit off and was going to lose on most of what he proposed. But the fact is most of our federal regulatory code doesn't really justify that. You're going to need to put teeth in that and actually prove it. Because if you can do so, then you can start rebuilding American manufacturing. This is really, if you had a chance to get an unvarnished opinion out of J.D. Vance, I know he understands what I just said is true.
And that's great for long term.
But it's not going to help. The markets are not going to react to it until it happens.
So, but you still need to get GDP up fast. How do you get GDP up fast, really fast?
You print money. That's right.
You get it up nominally. You just have to expand your money supply, which is just really expanding liquidity. And that's it. So now you start hearing things like, Tim Cook and all that. That agreed, right? But then you get the Jamie Dimon call, and the Jamie Dimon call is, hey, this SLR issue is a big issue. We need you to remove the supplementary leverage ratio on U.S. Treasuries.
So you should explain to the audience what that is, because it is, you're right, it's a big deal.
So this is a huge deal. So what is happening is, Jamie Dimon and the banks, what they're looking for is the ability to hold Treasuries on their balance sheet without negatively affecting their SLR, the supplementary leverage ratio, which is a ratio they've got to manage for risk, right? And so back in 2020, 2021, the Fed removed it. They just said, well, there's no ratio, don't worry about that. And then they put it back. But the issue here is that both the Treasury and the banks need for the SLR on USTs to be removed, meaning that they can hold Treasuries and not negatively affect their balance sheet. And if and when they do that, the banks will literally be able to hold the infinite amount of Treasuries, and it won't matter. And that is pure liquidity coming into the market. So that's a really big deal, and that's one way that they'll be able to expand that the liquidity.
So let's put a fine point on that. So let's say the long-term rate is 50 basis points over the overnight rate at the Fed. Mm-hmm. What James just said is banks will be able to, because this is exactly how they bailed out the banks in 2008. So I'm going to explain this to you. Everyone who thinks that TARP is what bailed out the banks in 2008, they're falling for the old one, and this works better live than it does. When you do high school, I used to do magic in high school, and the first thing they teach you in magic school is you make a lot of motion out here, and you're doing the real stuff back here. So this was TARP and the bailouts and all that crap. But what actually happened was they said, you know what? We're going to let you borrow money from the Fed for free, and you're going to be able to buy Treasury bills for 3%, and you're going to make 3% on trillions of dollars. And that's going to go as profit right to your bottom line. And all of a sudden, you're going to look profitable. Well, what James was basically saying is as long as the long rater, they can buy treasuries at giving them a coupon that's better. Now, theoretically, people would say, well, what do you mean buy treasuries? Shouldn't they just be investing and loaning into the economy? It's like, yeah, if they think they can get a better return. But if they can't, and they could borrow from the Fed here and effectively not loan, but buy treasuries here, that's free money to the money center banks. And if you ever wonder who the big donors to Congress is, there's a reason the banks are that way. But that is literally a subsidy. It's not the only subsidy they get. We've been talking about the stablecoin bill and what's going to happen to them. My guess is, here's my tinfoil hat. My guess is that in order to get the final few votes over the line for the stablecoin bill, they're going to promise them, don't worry, we'll get rid of the supplemental liquidity ratio at the same time. Because for those who don't understand why, if you listen to Crypto Town Hall, you have heard me or Carlo or others, Austin Campbell, rant on this topic. But it's an important one. Mm-hmm. Basically, roughly there's about $6 trillion in trapped accounts that, because money moves so slowly, people have to hold in checking or savings accounts that pay 0.5% of interest or less. As opposed to getting 4% interest. Do the math, it's like $24 billion a year in subsidy to the banks for something that economically makes no sense if they had crypto. I.e., if you could move things in really quick, I want to pay, I pay, and I'll take it out of my yield-bearing account, or I'll move it from one token to another, and I'll do it that way. At the same time, so that's $20 billion a year of reasons for the banking lobby to fight the stablecoin bill. Basically, they don't want that money going into the economy. But if they promise them the supplemental liquidity ratio at the same time, or leverage ratio at the same time, maybe they're like, okay, fine, the big banks will stop the pressure. Community banks will be SOL, but do they really care?
They don't really care, yeah, unless they have to bail them out. But then that's just another acronym, more money printing, more QE, and
yep. But all this liquidity, people need to understand what this means. I mean, if you're a company and you're tethered to your profits in one way or another, yes, liquidity will help if it goes to the economy. If you're evaluating Bitcoin or gold, it's just pure.
It's just pure. That's
true.
It's
the amount of dollars is the denominator, and it's a denominator for everything, but it's a purer way. So, do I believe that Bitcoin could delink in the process of this when this all plays out over the next 6 months? The answer is yeah. I think there's a chance. Is it certain? It's a chance.
I want to talk about Bitcoin. First of all, everybody who's here live, I know we're recording, you can now see that I have the best job in the world and the easiest literal job in the world. I just show up and I don't talk, and it's crazy. But I want to talk about something that's been the hottest topic here, just because I have the two of you.
Yeah.
And I know you have the Bitcoin Opportunity Fund. I've mentioned this a few times. I've probably been pitched or mentioned 20 Bitcoin treasury companies since I've been here. I think that's being a lowball estimate. I had one person pitch me 6 of them.
Yeah.
But they were involved in. Okay. So I've said from the very beginning, and I'm not concerned at all personally about MicroStrategy or Nakamoto or 21. I think they've got the right players in place. They're first to the market. But I've said repeatedly that this is going to be the next bubble. And if you thought that we were going to do super cycles and never draw down again, this is going to be the next thing. Mm-hmm. It was ICOs in 2017. Now all the people who were participating in ICOs can't make money in altcoins. So now we're doing Bitcoin treasury companies. I'm going to get in a lot of trouble for saying this at this conference. what's your take on them? I'm 100% sure you guys are participating in it because it is the thing right now for Bitcoin. I think it can be good, but will end up being bad because it's going to be the jackasses who come in when Bitcoin's $200,000 and say, we got to do a Bitcoin treasury company. And they're the 100th, 110th, and 120th one, and they're puking all their Bitcoin, when it drops 20%.
Yeah, I have a lot to say about this. Dave, you're gonna chime in on this, but
yes, but I want you to start.
So last night we had our Bitcoin Opportunity Fund. We had an event for our limited partners, and people are asking, "Are you guys doing these things? Like, what do you think about them? Is it gonna bubble? Is it gonna pop?" The answer is, at the beginning when we started investing in these things, and we figured out really quickly what MicroStrategy was doing because we have the advantage, and we are very thankful that we have direct access to Michael and Sharit and his treasurer, and so because we understood what their game plan was and how they were going about it and how they were capturing volatility and monetizing volatility. I've explained that a lot, so I won't go into it here. But the bottom line is we were able to come up with what we thought was a reasonable multiple NAV, meaning where the stock was trading, if you took all the debt and all the converts and everything and converted into common, you multiply that by the stock price, where is that trading over the underlying value of Bitcoin? That's the multiple we use, multiple to NAV, right? MNAV. So, MNAV. So we had a reasonable multiple that we were looking at. And that reasonable multiple was, look, we think that MicroStrategy is going to ultimately become the Bitcoin version of JP Morgan in the future, right? So it will be the Bitcoin finance company. That's what our reasonable expectation or in the future was. That's what we're thinking, which means that, well, if you look at JP Morgan, it typically trades at a 2.1 times book value, which is what you might look at if you were looking at banks. Okay, where has MicroStrategy been trading? Well, it's been trading between 1.9 and 2.4, 2.5 for the last year. So it's in there. That makes sense, right? But then you have...
So it was lower now.
Now it's about 2. It's about 2, fully diluted. Yeah, right around there. So now you look at companies that come out like Metaplanet comes out in Japan. And it starts, and we were involved in that. We got out of it early because the multiple went through the roof. And we're like, this doesn't make any sense to me. Okay, well, we understood that it was a Bitcoin proxy in Japan because Japan doesn't have ability to buy a Bitcoin ETF. If you're a Japanese investor and you have a retirement account or something, you didn't have the ability to do that. So that makes sense that it was trading a high multiple. It got out of control. Okay, fine, whatever. But then you start having all these new ones file in. And the multiples are going haywire. You've got 3 times, 5 times, 6 times, 20 times. It's out of control. So this gets to your answer of, is it like the ICO days? Well, I actually think it's more like the IPO days. And what I mean by that is back in 1998, 1999, it was absolutely out of control how the internet companies, any company that said they were going to be doing an internet strategy had, suddenly got crazy multiples in the market. But then all of these IPOs of things like Pets.com, or you had Amazon, and you had, so you had all these IPOs that came out, and we were literally in our hedge fund, we were begging on our hands and knees, and this is a $5 billion hedge fund. Please give us just a few thousand shares of Amazon to the bankers. And we put in for 1 million shares and literally get 1,500 shares. But you'd make $150,000 like that, And those were the days where everything was just trading at ludicrous multiples and none of it made sense. However, if you were an investor and you had a hedge fund and you were managing other people's money, you had no choice. You must participate. You had to be in those. Okay, so long-winded answer back to your question is, yes, we are involved. Yes, we believe some of them have value. No, some of the multiples do not make sense. But if you can participate in them and have a reasonable exit strategy, then I think you'll be okay. Do I think it eventually collapses? The answer is yes. I do not know when.
Chairs.
It's musical chairs. I don't know when, but we do expect it to collapse. So there's no way that we are going to tell our investors that we're going to make the maximum amount of money on this. There's no way. We're not going to top ticket. We're going to get out when we think it's ridiculous before outrageous, ludicrous, and we're going to leave money on the table. But you've got to be involved, and there are going to be a lot more of these, and it's going to be a fascinating and tumultuous period. But I do believe it's going to mirror 1998, 1999.
So, but it's important. There's two distinctions that I want to draw. Distinction number one are companies that, like 1998, 1999, say, okay, we're going to put our cash flow into Bitcoin. Fine. That's one thing. Mm-hmm. That is, to me, in those companies, if they have problems in their business model and there's a recession, yes, they may need that cash flow, and that's Bitcoin that might actually come on the market. Mm-hmm. Is that a huge percentage? No, most people would be conservative and put cash flow.
We're getting to the impact of Bitcoin, right?
Yeah, that's what this show's about, the impact on Bitcoin. So I want to go there. So in those treasury companies, only the irresponsible ones are going to have any impact on Bitcoin because they're going to have it for what they are. If Bitcoin rises to a certain amount, they're going to take profits, just yet another kind of long-term investor. So if you're asking yourself, what's the impact of Bitcoin? Not the accumulation companies, but just treasury companies. I'd say that's probably a net positive with some downside risk in the future if companies are stupid, meaning that they overinvest, they put. Because the alternative is going to be what's going to make their shareholders more money, buying back their own stock or buying Bitcoin with cash. It's not, am I going to hold on to the cash in order to help fund my business if the downtimes happen? Companies, and we've all seen it. You look through every company that's gone bankrupt, Bed Bath & Beyond, Kohl, blah, blah, it doesn't matter, all of them. Every one of them bought back stock with cash that they desperately need now. So you're not going to stop people. You can't outlaw stupidity. It is what it is, and people are greedy and they're stupid, and it's going to happen again. And yes, some of that's going to be Bitcoin. To me, people who worry about that literally don't have their heads screwed on right, because it's like, what the fuck? I mean, this happens.
I think everybody wants
but the other
companies to put Bitcoin on their balance sheet instead of cash to hedge against inflation.
Right, and that's what they should do. So now let's talk about the others. So the question is, unless they're built wrong, the impact on investors is that the stock price goes down, that their MNAV is too high and you bought something at $100 when in reality it was worth 25. Where's the selling of Bitcoin going to come from in that case? It's a Bitcoin acquisition vehicle. Mm-hmm. They got the Bitcoin. Their shareholders aren't happy, but they have no reason to sell. Moreover, their business plan says they can't sell.
No, they're just the shareholders will hold the bag.
So
that's it.
When you talk about, Nick Carter had this whole thing, and I think the world of Nick. I mean, he's done more to help educate me on the environmental side of Bitcoin and on Operation Choke Point than any other human being. I don't know if he's here. He probably is here someplace, but it would be my guess. But when he starts talking about MicroStrategy being the next thing that's going to cause an FTX-style collapse, it's completely missing what causes collapses. What causes collapses is forced selling. So forced selling can happen because your hedge fund goes kaboom and you have to sell anything that's liquid. That can happen. But if you're a public company whose charter is to acquire Bitcoin, the only thing that's going to make you sell is the company itself going bankrupt. And the company going bankrupt doesn't mean the stock price goes to $1. It means the company going bankrupt, right? So yes, I suppose if Bitcoin accelerates to the downside and starts to fail completely, there's a 51% attack or whatever, yeah, okay, both happens. But that's tail wagging the dog. Mm-hmm. It's not going to cause the collapse in the price of Bitcoin, but it absolutely will cause people to lose a pile of money that are Bitcoiners that they may need to sell Bitcoin in order to raise cash.
They won't sell. I was going to say they won't sell the Bitcoin to make investors.
No, they might.
The
they might. That's the knock-on effect. But that's not the same thing as forced liquidations.
Yeah, but
where you have no choice.
But that wouldn't even make sense, because the reason that the stock went down is because it was at an unreasonable valuation in the first place
compared to Bitcoin.
Yeah, and so or they weren't doing what they said they were going to do. Like we saw today that GameStop bought $500 million worth of Bitcoin. Right? Okay, that's awesome. But they have another $5.5 or $6 billion sitting there that they could use to buy more. So what happened to stock? Investors are not pleased with that yet.
No.
So
was it down $3, something like that?
So that's the question. Is there's
$3.80.
it's down 380.
Yeah, it's at 31. I mean,
Yeah. So
I don't know. The day they made the announcement, it was at 25-ish.
Yeah, so there's
went down
still
to
net
22
positive,
and
yeah.
is now at 31. So do your math. It's like,
It's yeah, but the expectation going into today was that they would be buying more. But we'll see, and that's the question.
But now ask yourself the question: if you're in the audience and you're thinking about it, it's like, well, why did they buy only $500 million? It's because Ryan thinks that there's another dip coming and he wants to have dry powder. Yeah. So one of two things is going to happen. There's going to be a dip and he's going to buy it, and the dip won't be nearly as deep as people expect. Mm-hmm. Or he says, okay, I'm wrong.
I'll chase.
Yeah. and you end up having to chase, at least to some degree. So I don't know which is going to happen. We're in a trading range, and my point has always been, as long as there are people willing to sell it, then the buyers will buy. Mm-hmm. As soon as you stop seeing people selling it, that's when you get moves that we've all seen in Bitcoin before, that are kind of what we call the face melting rally type.
I don't remember who I was talking to. I said it yesterday. Maybe it was Jack Mahler's when we were sitting here, and I won't dox the person who I was talking to, but I was talking to an OG Bitcoin security guy, and he was talking about all the risk of this and how he hates them, and then said, but full transparency, I'm invested. Right? And I said, well, why? If you think that's going to happen? He was like, A, I think I understand it. But he was like, B, I actually bought it because I want somebody else to be buying it besides Michael Saylor. He said, I'm actually so concerned about how much Michael Saylor is buying and will continue to buy that somebody else needs to take the same strategy and participate.
Yeah. Can I make a point about that people, just to contextualize it, take a look at the percentage ownership of the entirety of the S&P 500 of every stock in it, and add up 4 companies: BlackRock, Fidelity, Vanguard, and State Street. The 3 biggest indexers in Fidelity, which is a closet indexer to the extent that they're buying it. 27% of the market cap. Really? 4 companies. That would take, even at Saylor's grandest vision, it would take
5. He's only going to be 5%.
He wants to be 5, so it would take 5 of those.
So he needs to basically.
So it's like what I'm trying to say is,
however, though,
people in the Bitcoin world need to take a deep breath.
Yeah, I heard a stat yesterday, and I have not looked into it, but I'll share it, irresponsibly here.
We can actually edit this time.
We could edit.
But I heard that the expectation is for the Bitcoin Treasury companies to accumulate 50% of all liquid Bitcoin.
How? Who's saying that?
Yeah, that's if you think about all the companies that are acquiring. Just think through it.
So you're saying that half the investors in Bitcoin will move from private hands and private pools of money to corporate, as opposed to pension funds, governments, and individuals.
Well, if the bubble pops, then it pops from $500,000 back to 200, so we're fine.
Yeah.
Because if that happens, we're not
500?
I'm just saying we're not sitting at a million.
We're 7 figures.
So point being, we're not sitting at 110 when that bubble pops.
No,
we're sitting at 1.1.
And that's important.
Mike says we're going to lop off a 0. That's just adding 1.
Mike thinks we're going to 10,000.
Well, but Mike,
you know what? I can't say that.
You have to go in a couple minutes.
I can't say that because I can't speak for Mike, but I think I heard him say that.
He did.
He did repeatedly, but actually I've had him on a couple things lately, and he's sort of capitulating.
Okay.
A little bit.
Well, look,
I like Mike, and he's very smart. And he's.
It can happen, but it's a tail risk. It's a tail risk.
It's
there's a 51% attack on Bitcoin. Yeah. There's quantum computing does things that we can't anticipate. It's something horrendous, and it's a hell of a lot less likely than anything that's going to happen to me at the poker table over the next week. So, and believe me, I've seen almost everything that can happen at a poker table.
Have you played double down blackjack?
No, I play. Yeah, I've said this before. My grandfather was a bookie, and my father was a poker player, and I taught him how to count cards, and then we both decided it was too boring. Basically, outside of poker, I don't play any other casino games. So
that's because they're casino games.
That's because they're casino games.
Right.
It's like I ran a company, Two Sigma Securities. What were we? We were the moral equivalent of the house. We took the other side of retail. I'm not saying retail's stupid. They're not, but they pay too much.
That's literally what you're saying.
No.
That's what I heard. I heard it.
People pay excess spread to trade. They like the endorphin rush. People come to casinos because they want the endorphin rush. Yeah. Someone who wins goes on. Let's say, I don't care who you are. Let's say you have $100 in your pocket and you go on a winning streak. You win $500. You 5x your money, and then you lose it back, and you end up walking out losing your $100. And you go home and people say, "How was your trip?" And you say, "Oh, it was fucking awesome. I got up so much money. It was so great." Well, how'd you end up doing? I lost $100.
There's a reason they.
No. That's not what they say. They say, I was kind of even.
Yeah, well, they probably say that. You're right.
got kinda-
but
kinda
the
flat.
point is that
It's an entertainment budget.
there is a big difference between
They have
investing and trading and speculating and gambling. Gambling is really about the endorphin rush. It's all about it's really all about the adrenaline and what's going on.
There's a reason the casino sends the whale a plane to come back.
Damn right they do.
It's worth the expense. There's that guy, I know you got to go. There's this guy, James Wynn, that's on X all the time, right? Who's been like 40X long, $1 billion on Hyperliquid, which
I think
by
he
the way,
just got crushed today.
How does a
Yes.
DEX literally have the liquidity for that? I don't know. But, you know,
I can't answer that.
the price of Bitcoin has been between 104 and 110 for the last 2 weeks, and he's lost 12 million on a long, 9 million on a short, and I think lost the rest of it on a long today. He was up 80 million. And I was tweeting with him because I was critical. And he was like, yeah, that's what happens in the casino. I was like, you're not walking away even, buddy.
No way.
You're walking away down 50.
Yeah.
Like, you're going to be up 80, but you're going to rage trade it all the way back to zero. Like, you got lucky.
Be careful of leverage.
I think he's just marketing.
Yeah,
for
I
Hyperliquid or
always
something.
say this.
Maybe.
People who don't understand and who pyramid, the biggest concern that people have about Saylor is something he isn't doing, but the chart makes it look like he is. So when you take the Series 3 with futures, you know, they teach you one of the strategies they say that people use is pyramiding, which I couldn't believe was in a government kind of, licensed textbook, but it is. It's just hand to God. I'll tell you it's there. I just took the test for shits and giggles over the summer to pass it, just to show people that my brain still functions, but whatever. So it did. So there we go. The pyramiding is when you constantly lever up. Now, anyone in this room who's traded leverage who has not gotten their original stake wiped out by pyramiding, raise your hand, because I don't know anybody.
Well,
Every single person. I don't mean you're being wiped out like it's in bankrupt, but I mean the amount of money you put in it. I personally had it happen to me in 21. So I totally understand that I was missing, and that's why I'm so dogmatic about looking at the leverage in the system. And if we see people paying 100% to borrow to buy Bitcoin, I'm running for the exits to the best that I can, at least for that period of time.
Peace.
Exactly, right? But we saw that, and we saw that for a period of weeks. This wasn't for like a day. This was like for weeks at a time. Yeah. And so, yes. So when you start seeing people like James becoming the norm as opposed to, oh, look at that odd guy over there, that's when you want to start getting worried.
Yeah.
Perfect. You got to go.
I have a meeting. So thank you, guys.
Guys, Macro Monday on a Wednesday in Vegas without Mike, but we did what we could throw together last second. Awesome, guys.
Awesome.
Can't wait. Thank you. I'm going to give these ways.